Recording on. Today is Monday, April 5th, 2 p.m. section. We are going to today talk about the Walmart model and finishing up 3 more versions of the Excel file, which is going to be called the Bull, the Bear, and the Target. And then we're going to talk about how we use that model to then, or reuse that model to value another company. All right, so that's kind of a lot of what we're going to be focused on during class today. So to give you a preview, on Wednesday in class, we're going to work on evaluation of Nike. So in order to do that, we're going to need to kind of finish updating all the files that we do in class today and talk about how we change the Walmart data to be Nike data. 1 week from today on Monday for your next graded homework assignment, individually, you'll be valuing another company, turning in these 4 models, Excel files, as well as a write-up of your assumptions across all the models, which will be a minimum paper of 500 words. And 2 weeks from today, you'll be delivering your next group project. I moved it to Monday, April 19th on General Dynamics, which is the valuation of General Dynamics. So that's all coming up relatively quickly. So just wanted to give you a preview of where we're going next. But what we're going to start with today is the Walmart model from class, the as is, that you finished as part of today's homework assignment that we did in class last Wednesday. So let me open that model and then we will get started. All right, so section 301, make sure I do the right model. Okay, let me go ahead and share my screen. Easier to share my desktop. All right, so this is the file that you should have created last Wednesday for the as-is model that matched the video within 1 penny of a share price of Walmart at that time. And again, we said that the standard we're using going forward for the as-is model would be $1 of the current share price, but we actually were within 1 penny in the model that you matched for last week's assignment on Walmart. Okay, so as I said, today what we're going to do is we're going to create 3 additional models: the bull, the bear, and the target. So the bull and the bear basically represent what we think of as the best case scenario, or the top of Walmart's valuation for the next 12 months. The bear is the worst case, or the bottom of the range of Walmart share price for the next 12 months. So we basically have a high and a low. And then where we think we're going to be in that range is our target. Okay, and those are basically the 3 files that we are about to create. But as we create our bull and our bear, we have to be reasonable about this, because we're making subtle changes to our model. Change the growth rate here, margin there, G here, and those changes are multiplicative. And very quickly, a bunch of small changes become big changes, which what we thought was reasonable then starts to look a little unreasonable. So I guess the question becomes, how do we make sure that we basically create a realistic bull assumption? How do we make sure we create a realistic bear assumption? So I'm going to add to our model an ability to do a sanity check. Okay, so this is basically the last thing we're going to do to need to complete our models, which is we're going to actually add 1 more tab to our model here at the end. And this tab is going to be called, add an Excel worksheet, the multiples tab. Now, multiples is the next section of the course. that we are going to go through. So some of this is a preview of where we're going next in terms of the concepts, but we want to have this. I'm going to save this. This is section 301. And this is going to be our bull. All right. Now, when we create the bull, as I said, we're going to do what we call a sanity check. We're going to use the multiples of the company to help us with the sanity check, right? So let me tell you what I mean by that. So if we go into Bloomberg and we go to WMT US equity, we're going to go into RV, which is where we see the industry peers. So this is Walmart's curated peers. And we're going to go here into custom. And what we're going to do is we're going to create a new template of next year's multiples. Okay. So what do I mean by next year's multiples? Well, off of EEO, the current year, also known in Bloomberg parlance as this year, would be fiscal year 2022. This is this year because it has a combination of data for the actual and forecast. And this is next year. So forward year one, forward year two, this year, next year, all right, when we talk about the future, right? So in just a minute, we're going to care about these years, which are the full clean forecast years, as more representative of the valuations of the company that we're looking at. So forward year two is the one we're going to look at. So basically these multiples. But instead of just looking at these multiples for Walmart, we're going to look at it across the industry. So hence, we're going to do this in the RV screen. So what you're going to need to do is create a custom RV template. And in the first column, we want to have the enterprise value space TO space sales multiple. Okay? And when you start typing in that, in the matches, Bloomberg's going to tell you there's enterprise value to this year's estimated sales and enterprise value to next year's estimated sales as default fields. And so this would be the first forward year, the second forward year. And this is what we're going to use, the second forward year. Enterprise value to next year's sales. So select that, hit enter, and we'll have all of the data points, including the industry average. Now, the next column we want is EV to EBITDA. So EV, and then you can also do just a divide EBITDA as an option as opposed to TO, right? And you want EV to next year's estimated EBITDA. And then you hit enter. And we're going to do the same thing with EV to EBIT. And by the way, if you type in EV TO instead of divide EBIT, then it might actually not show you everything. So what you want to do is show more matches, and it will just tell you more things that it could find that says EV to EBIT. And you want EV to next year's estimated EBIT. Okay. You can also do as EV divided by next year estimated EBIT directly, but select that, hit update, and that's the enterprise value to EBIT multiple for next year. And then the final one is if you type in PE, P/E, we want the price to earnings multiple for next year. So estimated PE next year. All right, so that is second forward year EV to sales, EV to EBITDA, EV to EBIT, and PE. We're going to save this template because we're going to reuse this a lot the next couple of weeks as our multiples template. Okay. Now, in just a second, we're going to export this data into our model. So before we export it, under settings, under global settings, you want to make sure that you're exporting, which says Excel export mode, static data. You don't want to export dynamic link. Okay, so make sure that under your settings, global settings, under the FA screen or RV screen, that it gives you the ability to export static data, and hit close. Now you might say, well, why does that matter? Okay, so here's what's going to happen. Now that we have this data, we're going to export it to Excel. And that is the data in Excel. Right? Now, because we chose static data, these are numbers. Right? If you did not do that, and if you global settings have this set with dynamic link, and you exported the data, then what it's going to do is it's going to give you an export, but instead of giving you numbers, it's going to give you formulas, which basically are tied to the Bloomberg data service, and in Excel, update the numbers in real time. But if you export this file and you're not logged into the Bloomberg data service, and you open it up in another version of Excel that doesn't have the Bloomberg plugin loaded, it's going to error out your file and you won't have any numbers. Okay? Because I have a Mac and I have two versions of Excel. This is my normal version of Excel, and I don't have the Bloomberg add-in. I'm not actively logged into Bloomberg with this version of Excel, so I can't see the data. Okay, so the nice thing is I have a different version of Excel, which is right here, which actually has the Bloomberg add-in in it. So that if I open it with the Bloomberg add-in, all of those fields get filled in with numbers. Okay, but it still becomes a problem because if I leave the cloud, then it's going to error out again because every time I open up the file, it's not going to have the numbers. So that's why we want to export static data. So back to the original file, not this version. You want to have this version. Then you want to select all of this data, copy it, go to cell A2 of our new multiples template. So that's version of Excel here. Go to cell A2 and paste it. So what we've just done is we've taken the multiples data for Walmart based on the share price of, what's Walmart share price right now, around 140 a share. It's gone up this week. 139.57. So based on that share price, these are the multiples. And then these are Walmart's current share prices of the peers. And this is the industry average today, Monday, April 5th. All right, questions about anything I've just done? Because you need to be doing this too. All right, if no questions.
Wait, what's the last column?
It's PE. So that's the estimated PE for next year.
Oh, no, sorry. What's like the Bloomberg function for it? Is it just the best PE and then for?
Well, there's several ways to get it in Bloomberg, but the one that we did here under RV custom is I just said type in P/E and you want the one that says estimated PE for next year.
All right, thank you.
That's the one that we chose. And so the point is, there's actually different ways to get to this. So for example, if you were to go to best PE ratio, it'll say which one do you want? And you can actually choose, like, for example, your own PE. And we could say, I want the PE for years ago forward. That's the same thing. So you can create your own formula here. But since analysts do that all the time, Bloomberg just has one right here for PE pre-populated because it's a fairly used PE multiple for the estimated PE for next year. So that's the way we got it in this template. All right, other questions? All right, so back to this. Here's what we're going to do. In our model, now this was based on the 136 Walmart share price last week, but here's the enterprise value. And here's next year's sales in the income tab. So there's the enterprise value to sales multiple right here in our model. Okay. So what we're going to do is we're going to compare the multiples that our model implies to the real world multiples. And we're going to use that for a sanity check. Okay, to make sure that we don't get too unrealistic about the prices that we're creating. Right. But final trick in doing this is that the calculation that we are using for enterprise value in our model on the DCF tab, slightly different than the calculation that Bloomberg FA uses for enterprise value for Walmart and other companies. So this is their calculation for enterprise value. And what you'll see is that basically their calculation takes the debt and equity, preferred, common, market cap equity, preferred equity, debt, adds it together and subtracts the cash. Okay. So let's go back to our model. Let's do like an overlay here. So what Bloomberg is doing is getting the same enterprise value as summing these. Okay. The equity value and all this other stuff. That's the enterprise value. But then what they're doing is they're subtracting all the cash. So this minus all the cash is their definition. Well, if you look at this minus excess cash, that's pretty close to operating value. So just conceptually, what Bloomberg calls enterprise value is technically what Modigliani Miller would call operating value. It's actually enterprise value minus cash. That's their definition, right? So it's a little nuanced difference in the way they're doing it and the way we're kind of doing it using the academic format. So two things. One, Bloomberg is subtracting all cash, and we would only subtract excess cash. And two, Bloomberg is not subtracting these other non-operating assets. Okay. So just a couple of nuances in the way they're calculating enterprise value. So what we're going to do here in our model in cell E18 is we're going to create what we're going to call the Bloomberg enterprise value, or BEV, and we're going to calculate in cell E19 the actual formula as a Bloomberg we're calculating it. How do they calculate it so we can actually match it? Which is going to be important because if we're going to try and replicate the multiples, enterprise value to sales, then I need the same enterprise value formula in my model that Bloomberg is using in the real world to make an apple and apples comparison. So how do I make that adjustment? Well, for cell E19, the adjustment is take D19, which is our enterprise value, and subtract all of the cash. So where do we find all of the cash minus, not just the excess cash, off the balance sheet? Column G is the current year. The operating cash is G4. Subtract G4 off the balance sheet, and then subtract G5. That represents all of the cash on the balance sheet today. So Bloomberg would actually say the enterprise value of Walmart using their formula is closer to 436 billion. Modigliani Miller would call it 454. Everybody see what I just did? Questions about that? All right, so given that we've created a Bloomberg version of enterprise value in our model, I'm going to go back to multiples. And in cell A1, these are going to be the model multiples. And what I want is enterprise value to sales in D1. So in cell D1, off my DCF tab, my Bloomberg enterprise value, which is E19, divided by, from my income tab, second forward year sales, which is 1, 2, I3. That's EV to sales in the model. We'll get rid of the currency and the formatting. 0.77. Now here's the deal. These numbers should be pretty close to each other. They're slightly off because this is based on the $136 share price. And this multiple of 0.79 is based on the $140 share price, 139.63, right? So when we do this in the future, you're going to do this process at the same time as the rest of your valuation, because you don't want to have the multiples be done at a different share price than the value of the company that you're actually putting together at a different share price. So translation, we should have done this last Wednesday when we did the actual valuation. We didn't, so the numbers are going to be slightly different. It's okay for purposes of setting up the model and the process, but going forward, so for example, Nike, when we do this in class on Wednesday, we're going to do this all in one day. So back to our model. We're going to do the same thing for cell E1 for EV to EBITDA. So what is the Bloomberg enterprise value based on our current share price in our model? That's going to be from the DCF, E19, divided by from the income tab, second forward year, 1, 2, column I, EBITDA, I8. What is the enterprise value to EBIT multiple that our model is forecasting? DCF tab, Bloomberg enterprise value, E19, divided by from the income tab, I10, EBIT. And then finally, what's our PE next year? Equals from the DCF. It's price per share divided by earnings per share. But the actual price, if I take out shares, is the common equity value, which is D26. It's the price of the company. Divided by from the income tab, second forward year, 1, 2, net income, I22. That's PE at 2305. So this is our models, those three multiples and PE for next year based on the $136 share price. This is the share price today based on $140 share price, and this is what the industry is trading at today. So I now have all of that on one screen. Again, I'll pause to make sure everybody's kind of caught up in this step, what I've been doing. All right. So assuming you're caught up, now we're ready to complete our bowl. So here's the idea of the bowl. So with the bowl, what I want is that optimistic scenario. How good can Walmart be in the next 12 months? So I'm ready to start making my assumptions. So assumption number one, I think that in the bull scenario, tax rate's not going to change. So for example, right now, the Democrats are pushing a 28% tax increase. I don't think it's going to pass. That's part of my bull scenario. Highlight that as an assumption. I also think that Walmart's going to have a higher EBITDA margin in the out years. It's not going to fall to 6.3%. I think it's going to be 6.6%. It's going to be just as good as it was in 2025. They're going to maintain the higher margin in the future. I also think that Walmart's going to grow faster in the future, 4% and 4%. Because I do think that e-commerce is going to surge. I think Walmart is going to do well in the e-commerce business. And as other retailers struggle, Walmart, the stronger are going to get stronger. And it's going to start to grow at a faster rate. And I think it's also going to be true long term. So I'm going to come over here to my assumptions. And for my G, I think the G is not going to be 1.4% per year long term. I think it's going to be higher. I think it's going to be 2.2% per year long term. Now, when I've made those assumptions, my share price has been ticking up. And now it's at 174 per share, 173.80. And that's now what I'm going to start calling my bull. I think if all these things go right for Walmart long term, for these reasons that I've articulated, I think they could trade as high as 174.80 in the next 12 months. Okay? And by the way, I have done my EIC. So I did a BICO on Walmart. I went to the industry primer under BI dashboard. I went to BRC and I've read through the analyst reports. I've gone through the industry analysis in other data services, including we're using before. Track of this. I went through our dashboard in VBIC to get to IBIS World, the industry reports. So I've gone through multiple sources to do my EIC. So that's another reason why it's important to do EIC before I do my valuation, because I have a fairly good idea of what's going on in the industry when I'm doing my bull and my bear, right? So I'm basing it not just on arbitrarily 10% higher. I'm basing it on assumptions, which I think are actually more reasonable, that will lead to the higher or lower share price. Okay? So with that in mind, I now have forecasted a share price at the high end of 173.80. But the real question is that reasonable, right? So here's the point. I then go to my multiples tab. These would be the trading multiples for these four multiples at the share price of 174. Walmart would trade at 96 cents next year's EV to sales. Is that reasonable? Well, the industry average is 1, and Walmart was already below average. Target's trading at 1.16. Dollar Tree's at 1.31. So when I look at this number, I don't think that 0.96 is unachievable for Walmart in the next 12 months. EV to EBITDA would be 15. Now it's a little bit higher than industry average, but still lower than Costco. That's about what, again, Dollar General's trading at. EV to EBIT of 22 times. Again, it's a little bit higher than industry average, but still below Costco. And PE of 29. Again, it's at the high end of the industry range, but it's still below Costco. So all I'm saying is this is aggressive, but I could still see somebody paying these multiples for this share price, given what I see in the industry today. So I'm comfortable that this is a realistic bull. Versus, I'm just going to throw a number in here. What if I had just convinced myself and I drank the Kool-Aid that the G of Walmart was going to be 4% per year versus 2% per year, and I had some rationale for explaining that? Look at these multiples. Does that look as realistic? G of 4%. Look at that, compare it to that. Is that a more realistic share price? Is that a bull that's in probably what could happen for Walmart in the next 12 months? Yay or nay? What do you guys think?
No.
Why not?
I don't know. The numbers just look way larger than what they currently are. And within the 12 months, that's a short amount of time.
Yeah, not just way larger than what they are. They're also well above average. They're well above most ranges. Like no one's trading at this PE in the industry. No one's trading at this EV to EBIT or EV to EBITDA in the industry. And we're talking about some high growth companies compared to Walmart and some higher margins like Target's. So I'm not saying anything is not possible anymore. Look at what's happened in the last 12 months. You couldn't have predicted that. And there's companies like Tesla and GameStop, which defy logic every day. But at the same time, would really have to be an extreme. So I'm just saying, like, this is the danger of my bull and my bear, is that I can convince myself that this sounds reasonable from an assumption standpoint. But when I start looking at the multiplicative data, I'm like, no one's going to pay this for the company realistically. So this is too high a bull. So I'm going to go back to my assumptions for my G is 2.2%. I'm going to say this is my more realistic bull. That this share price, which works out to be around 174, is my more realistic bull. Which random sheet came from. Yeah. All right. Now, next, file, save as, bear. Now I'm going to put on my pessimistic hat. What could go wrong for Walmart over the next 12 months? And what would be my assumptions? So start out with one. Taxes increase to 28% next year. Democrats pass that. Number two, it's a tougher retail market. I just read a story, which I posted on LinkedIn during the break, that UBS is estimating that 1 in 11 retailers will disappear in the next 5 years. That is just going to be a much more competitive environment in retail, particularly as we go with disruption online. So that's going to lead to lower prices. So I think that the margins are going to fall and they're going to approach where they were historically at 6%. I don't think they're going to be at 6. I also think that Walmart's not going to grow. They're going to be flat to no growth. All right. And I think long-term, this is going to be a challenge for them. So back to my assumptions, I think this G long-term is going to be closer to 1%. Okay. Now, when I throw those in, that's share price of 106 a share. So I'm saying my downside is closer to 106. Now, for the reasons that I just articulated. So back to my sanity check. These are the multiples of the $106 share price. So again, is this what could happen to Walmart? Well, we're now even further below average, but like this is BJ's level. This is Big Lots level. So essentially, if Walmart turns into a broken stock and starts looking like a BJ's or a Big Lots, they could trade this low, right? But I'm not saying it's the likely scenario. I think it's more my bear case scenario. Those things that I just articulated would have to happen to make that come true. But I think that this is a possibility. Versus if I had gotten even more aggressive, and for example, I said G was going to be 0, and my share price gets down to share count got accidentally written, and my share price gets down to 94, then I start thinking, yeah, okay, this starts getting a little too bearish in the next 12 months. So again, this is more art than science, but starting to look at the trading multiples, it'd be hard to believe that Walmart's going to trade this low in 1 year. Okay, that many things would go wrong to get the beliefs to be that change from where they are today. So I start getting below $100 a share, and I'm just like, I don't think that that's even a realistic bear scenario. So I think that's too aggressive. So I'm going to put it back at 1%, which gets me to 106, and that's my bear. All right, so I've got my scenario for my bull, my justification, and I went through my sanity check and realized I didn't drink too much Kool-Aid. And I got my bear, I got my sanity check, and I got the bottom of my range. Now I'm ready to think about the target and where I think Walmart is going to end up between the two. Because when you do your target, that's the whole point. Where do I think Walmart's going to be? The target by definition can't be higher than the bear, or bull can't be higher than the bull and lower than the bear, because otherwise it would be your bull or your bear. Okay. So those are your markers on either end of the range. Now it could be near one of those sides of the range. All right. And you can say, this is where I think it'll be, but nonetheless, it needs to be within that range. So realistically, where do I think Walmart's going to end up? I actually think Walmart is going to grow at close to 3.5% into the future. I do think that their margin's going to stay stronger, although come down a little bit, maybe 6.5%. I do think that the tax cuts probably will not happen. So I can 6.5. So I can go back to the 25% tax rate. And I do think, and this is the more important assumption, that the G is probably going to be something like 1.8%, higher than it is today, but not as high as in my bull, which is going to get them to a share price of 154. Right now, when I do my buy, sell, hold opinion, if I'm within 10% of the current share price, that's considered a hold. 10% of 136 is 13. So add 1360 to 136, and that's 140 or 150. So basically anything up to 150 is a hold. I'm at 154. I'm now in the buy range. So for me, Walmart's a buy for the reasons that I just gave. Now you might have a different number. You could have slightly different assumptions. I can't say that you're necessarily right or wrong, but nonetheless, you have to articulate that using real world data and justify your assumptions in your write-up. So this is your chance to give your opinion. And right now, there's not unanimity on these opinions, because if you go back to A&R for Walmart, you'll see that there are some analysts that say buy, some hold, some sell. So for example, Jeffries has a buy with a price target of 180, right? Versus BMP Paribas has a price target of 120, right? So this analyst is much more pessimistic than that analyst, which is much more optimistic. And so that's the point. It's like in the real world, there's some differences of opinion of what Walmart does. And what Bloomberg is actually doing is just taking all these 12-month price targets and averaging them. And right now, the wisdom of the crowd is 158. So I'm not saying I'm looking at 158 as what I have to be for my target price. I'm actually a little bit more pessimistic than that, 154. But like most of the analysts here, I'm a little bit more positive on Walmart than negative. But there are some very negative people on Walmart. You can see that here in their price targets. But that's the point. You would have to explain this and explain your assumptions as to why. So that is the Walmart valuation. Those are the 4 models. Those are the 4 Excel files you'd have to turn in. That's the difference between the Excel files. And when I talk about assumptions, that's what you have to articulate. Questions? All right. If no questions, then as I said, your next assignment on Wednesday is to reuse this valuation model. And we're going to do this with Nike and Class. And then I'll give you a different company, which you'll have to do for next Monday, which means you're going to turn in these 4 Excel models with the multiples and all the data in it, as well as the different assumptions. You're going to write that up in a paper explaining this all 1 week from today. And you'll get that assignment after we do the in-class Nike. So you have to create the changes to these Excel models that we did in class today. Otherwise, you're not going to be able to do the future assignments. So that's the first thing that you need to do. And then the second thing you need to do is, how do I reuse the Walmart model to put in, for example, Nike data? How do I do that? So I'm going to show you the other process to do that now, which you're also going to have to do to your Bloomberg terminal, because we made this on Bloomberg. So the secret to all this is this model data tab, because this is the blueprint for the historical data that we use to create the Walmart model. So if we're going to do, for example, Nike in class on Wednesday, then I need to replace Walmart's data with Nike's data exactly in this tab, in this order, for these 80 odd rows for 6 years. Okay. How do I do that? So in Bloomberg, let's say we're going to go to Nike and KE. Actually, let's show you FA. Go from Walmart first. Where did the data come from in the first place? Custom. Under FA custom, I have a template, which I had previously saved in my terminal account, called model. And it's 6 periods. And it's these 6 historical years. I scroll down, which is basically this data exported to Excel. So you will need to create an FA custom template that basically matches this. And you need it for 6 years. Now, where do I create the template from? This is your recipe. Columns A and B are your recipe to create the template. And specifically, column A is the friendly name in Bloomberg, and column B is the actual database field in Bloomberg. Now, generally, this column B never changes, okay? Because this is a database field, and people in Wall Street map to these fields. Column A can change because these friendly names might be different by industry or different by country. Just something we figured out. So for example, in Europe, they might call revenue turnover, but they don't change the database cell, still sales underscore rev underscore turn. Okay. So friendly name, database name. So here's what you need to do with this exact order, with these exact fields, basically create a template. You're going to basically create, so you go to custom here. You're going to create a custom template. And where it says enter field, look at column B here, and I'd start with column B. Sales underscore rev underscore turn. Take that, copy it, go to Bloomberg, enter field, paste. Select the first one. If you hover over it, it'll say Excel field ID, sales underscore rev underscore turn. Repeat, cost of revenue. Now here's the thing, if you put in the friendly name, cost of revenue, and search for it, there's a lot of cost of revenues, and I might choose the wrong one. But if I put in IS COGS to FE and PP and G, copy, enter field, paste, and select the first one, that is the right cost of revenue. So I'm just saying that this is a process you're going to repeat 80 more times. And you need to basically create this exact list of fields. It'll take you 15 minutes, 10 to 15 minutes. That basically becomes your exportable template, which you need to save. I called mine the model template. You call yours whatever you want, but after you create it, save it. Okay, because that's going to be a very important template in your terminal, because this is how we reuse the model. This creates the data for the reusable model. And you'll have to do this yourself. I'm not going to give you the data. You're going to have to export the data yourself. And so you'll need to get this from the Bloomberg terminal. Questions about this?
Professor, I have a question.
Yes.
When we export from the RV tab, the multiples, could you show us how to do that again?
All right. So now, let's just say we've gotten to this point and we go to model, and you now have this done, okay, which is what you need to do for 6 periods. Then you need to go to settings and you need to make sure number of periods is 6. Your terminal defaults to 10 on an account. So we're not needing 10 years of data. We want 6 years of data. So make sure it says 6. Then for data, make sure none of these are checked. You don't need Bloomberg to give you extraneous columns in your export. So don't have any extra columns in your export. Make sure none of these are checked. For display, make sure it's ascending is the order, so that the most current year is on the right, and then update. Okay, so that way your screen should now look like this, right? And you're ready to export. And now I got to tell you about a change that Bloomberg made very recently, that I was on the phone with them, tech support today, that unfortunately they confirmed. If you remember, when you were on the FA screen, there was a very important setting that I had you change earlier today under Excel, under RV custom setting, global settings, where you have the Excel export mode. See this, dynamic link versus static data? Bloomberg just removed the Excel export mode as an option from the FA screen. It's in the RV screen, but they removed it after 10 years or more from the FA screen. And they confirmed to me this morning on tech support that they made that choice. Now, why they made that choice, I don't know. I don't like it. Sucks for you guys. But what this means is now when you create this template and you export this template that you've just created in the FA section, it is always going to export this as formulas. You can't export data anymore from FA. They just changed this. You can only export formulas. Now, if you're logged into Bloomberg, so file, save as, Nike export, put this in my downloads folder. Now, if you're logged into Bloomberg, very important, make sure that when you go to the Bloomberg cloud account, that you choose Bloomberg with Excel. Choose with the Excel plugin, because that way the Excel version that comes with the cloud account will have the plugin loaded, which means that when you export this file, I have two versions of Excel on my computer. I'm going to open it with the Bloomberg Excel. When it opens that file with the Bloomberg add-in, then it's going to replace it with the data. So as long as you're, excuse me, as long as you're exporting with the Bloomberg add-in, Excel add-in, you're fine with getting the data out of the FA screen, right? However, when you take this data and you leave the cloud, it's going to error out. Because once you leave the cloud, it won't be able to find the hookup to Bloomberg, and it will just error out the fields. So before you leave on the Nike export, so I'm gonna, don't save. So you're gonna basically switch this to Nike, NKE US equity. So this is now Nike's data in the model, or you can go to Nike FA custom and then choose your model. Either way, when you export this to Excel, now, unfortunately, I don't export it with the plugin on my default Excel. So yours will do this. Nike export. Excuse me. That's why. Open with Excel. So when you do it, it'll look like this. And it will fill in all the Nike data. Give it a second to do it. Might take a little bit longer in your account just because you're dealing with the cloud. But here's the important incremental step. Once it finishes loading all of the data into your Excel model, in order to be able to copy, paste it, and use it in our evaluation as a reusable model, what you're going to need to do is select the whole tab, right-click with your mouse, copy the tab, select the whole tab, right-click with your mouse, paste special values. And what that's going to do, okay, is going to take all those formulas and it's going to save them as numbers. So that now, when I save this file, I have numbers, right? I'm going to put this data into this model, right? And so when I put it into this Walmart model, save as, actually, my bear, I'll do this off of my Walmart. Sorry, I just got a lot of fields open right now. My bull, my bear, my target. So this is my bear, save that. File, save as, Nike. Underscore as is. Section 301 as is. Put it in a folder called Nike. So we'll work on Wednesday's class, and then I'll save this. So this is just a Walmart file, final the final target or bear model. You can use the bull as well. But the point is, I'm going to take this model data tab. I'm going to take the data that I just exported from Nike, and I'm going to replace it field for field. Now, when I do, the second thing that I'm going to have to deal with are these long dashes, right? For whatever reason, Bloomberg exports blanks as long dashes, not zeros. And Excel will choke on a long dash in any formula. So if you have a field with a dash in it, Excel will just error out. So we can't have long dashes in our model. So the final step we have to do, and I haven't found any other way around this, is you have to use find replace to get rid of the long dashes and replace them with zeros. So in your Nike exported data or any other company, select the long dash cell, copy it, which is Control C, find, Control F, find what, Control V, paste the long dash, replace all of them with zeros, replace all, and I would make 37 replacements in the Nike file. So when I save this, I can then take this data, select the whole tab, copy it, go to my Walmart model, that is now saved as the Nike file. Select my model data tab, paste special values, and basically overwrite all of the Walmart data with the Nike data. Copy, Walmart, paste, values. So now my Walmart model has the Nike data in it. Check my CFI to make sure I didn't break anything on the CFI. Still balances, that's good. And now my historical data, in fact, same thing, my ROIC tree, for example, this is Nike's ROIC tree now. In what used to be the Walmart data is now with Nike. So now I'll make some changes, which is what we're going to do in class on Wednesday to finish up the Nike evaluation. So for example, Nike's last year was 2020. So I'll go to assumptions. Last reported year is 2020. Nike's WAC is not 5.3%. Nike's WAC is WACC is 9.7%. So it changes 9.7, etc. And this is what we'll go through in class on Wednesday. Okay, so that we will then do an as-is valuation of Nike based on whatever their current share price is, changing the Walmart data to the Nike data. But in order to do that, you need to have this tab in this model with these multiples, which has the Bloomberg enterprise value in it. So I'm not calling this a graded homework assignment between now and Wednesday, but between now and Wednesday, you need to get this done. Because otherwise you won't be able to do what we're doing in class on Wednesday with Nike. You won't be able to then do your next homework assignment next Monday, and you won't be able to do your group project on General Dynamics. So these are kind of the requirements of what you need to do to finish up your model, and also how we'll then use the model to make it a reusable model. Questions about any of that?
I have another question, Professor.
Go ahead.
When we submit the assignment for today,
Yep.
We need to submit our assumptions, like the research we did,
No.
or the number. Nope.
Well, are you talking about the one that was due at 10 a.m.?
No,
What we did in class today?
yeah, what we did in class today.
What we did in class today, you're not submitting. Not today. Okay. So I'm just telling you, I'm not making today a graded homework assignment per se, but you have to do everything I did in class. Otherwise, you won't be able to do the in-class work on Wednesday or future assignments. So
Gotcha.
you just have to get this done. It's not being graded. The other thing is, you notice that when we were going through the Walmart, the Bull, the Bear, and the Target, I was calling out the assumptions that I was making as I changed the files. Now, in your individual assignments, you're going to write that out. So when I say next week that you have a paper of minimum 500 words, what I mean by that paper is that you're going to go through each model. There's 100 or so words on each model, and you say, I use this WAC, I use this growth rate, I use this G, I use this margin, and here's my rationale of why I changed it. I use this tax rate, okay? So that's the write-up. When you do general dynamics verbally in 2 weeks from today, you'll say the same thing. I used, or we as a team use this tax rate for this assumption in this model. We use a different tax rate in the other model. You know, we use this growth rate for the bull. We use this growth rate for the bear. This was our basis for doing this. So that you'll have to articulate eventually. Today, I'm just trying to make sure everybody gets the file. You kind of know what needs to be mechanically in your files to be able to have that conversation. Next class, we practice on Nike. Other questions? I'm also not going to give you the Nike data. You have to export the Nike data. So that means you have to go to FA and you have to have this custom tab. So individually, spend 10, 15 minutes, create this reusable tab. And I'm going to give you a quirk that somebody noticed as they were recreating this earlier today. They asked me about this. It's row 27. When you get to row 27, they said they were having a trouble, which means they were on cash and cash equivalents. Okay. So again, the way I told them to do this is copy over the cell, select. So you copy the cell, you go in here, enter field, cash and STI. Not finding any matches. Can't find it. I don't know why. Database field exists. So what I told them to do is type in the friendly name, which was this, cash, paste it in, and miraculously that Bloomberg field exists. Right? That's just an error in Bloomberg software. Because when you select this and look at the field ID, that field ID matches that field ID. But unfortunately, if you search for that field ID, you won't find it. So you'll might run into some quirks with the Bloomberg. It's just their data service. We're going to get detail around it. But generally, and enter in column B to get column A. If you can't find it in column B, enter column A to get column B. You might have to do that once or twice. But basically, you need to create this template. So this is where we'll pick up in Wednesday's class. And as I said, we'll do Nike in class on Wednesday. I will give you back the balance of our time today to work on your FA custom template and get that ready to go. See everybody on Wednesday. Have a good day.
Thank you, Professor.
Yep.
Hi, Professor. I just have a quick question.
Yep.
So moving forward, we're basically working within 4 Excel sheets at a time.
Well, I'd say you're working within one Excel sheet, which is what I'll call the as is, and then you're creating 3 versions off of that, the bull, the bear, and the target.
Okay, so just the prep for Nike, create the bull, bear, target.
Now we're going to actually do
based
the
off
bull, the
of-
bear, the target in class on Wednesday. What you really need to do is the ability to do the as is, which means you need to have the model and Nike's data in it. Just get to that point Wednesday.
That requires updating the multiples as well.
Well, if you don't have these multiples in your model, because I'm not giving you this file, then, for example, if you're lacking this tab, you can't do the bull and the bear and the target on Wednesday.
Yeah. I was just curious if the multiples update like every day, like if we would have different numbers, or did they stay relatively the same?
No, these are updating really in real time, even during the day. Because back to Walmart, this was based on Walmart trading at $140 share price today. If Walmart share price is different, these multiples change, which is true of every one of these companies. that's why it's very important that when you do this multiple analysis, you do it at about the same time you're doing your valuation. Because if you do it when the prices are different, the multiple won't jibe with the actual price of the company. And that could just make it a little weird when you do your analysis because the numbers won't match. Right now, it wasn't that far off for Walmart, but notice that even here, it was far enough off that it became a problem for us.
Yeah, understood. Thanks for clearing that up.
Sure, no problem. All right, see everybody on Wednesday. Have a good day.